Hello everyone, this is xutada. This marks the first video of the channel when it comes to trading. And in this video, I'll just be explaining my thought process behind the trade going into Monday night, Tuesday session. And yeah, right before I get into this, I'll just briefly do an explanation of my model that I trade. It's a concept from Trader Day and Bucko Trades. They speak about quarterly theory. And quarterly theory is basically when price aligns with time. If it doesn't, we don't take a trade because time is fractal in trading and everything must align. So, to keep it simple, how the quarters work is if you're breaking it down on a weekly standpoint, Monday's quarter one, Tuesday's quarter two, Wednesday's quarter three, Thursday's quarter four, Friday is not part of the quarter because it's not part of the four increments within a quarter. So you have to divide it up on its own when it comes to breaking it down on a session level and on a microcycle level. So for breaking it down on a daily level, the four quarters within a daily would be Asia sessions quarter one, London is quarter two, New York AM's quarter three, New York PM's quarter four. And then if you're breaking it down on a session quarter, then it's in 90 minutes within the session. So for instance, let's use New York AM as an example. From 6 to 7:30 is quarter 1, from 7:30 to 9 is quarter 2, 9 to 10:30 is quarter 3, and 10:30 to 12 is quarter 4. So with the sessions, it's just you're taking the whole session and breaking it down into 90 minutes, and those are the quarters. And then you can also take the 90 minutes from the session and break it down into four quarters, which turns into microcycles, and that's 22.5 minutes divided up into four. That'll add up to 90. But me personally, I think the best thing with using quarterly theory is with daily cycles, weekly cycles, sometimes session cycles. But the thing is with crypto, it's one of those financial instruments where it starts to move depending on like how the whole market is doing. Like crypto is very heavily correlated with Nasdaq moving and SPY moving. And I only say this because Bitcoin and ETH are the majors for the total market cap for crypto. So it has a very big correlation when news comes out and everything. It moves relatively, not the charts matching, but if we're bullish and bearish, it tends to move that way like 90% of the time. Um, so yeah, let's get into the trade and I'll explain my thought process behind it. So going into Monday, I don't really trade Monday. That's just me personally. It's my lowest probability day when it comes to quarterly theory because usually if Friday is expanding, you'll have Monday consolidating. And as you could see here, price didn't move too much to catch a drastic move to really make a good risk to reward ratio. So going into the night here for Monday, what I saw here was we were going into Asia and we started developing a low. So I was like, okay, this is really good. We started developing a low. By the way, this indicator is a session indicator. It's called ICT kill zones. It just marks out the session's highs and lows. So yeah, back into this. So I saw Asia was developing a low right here, and previous day low for Monday was being protected. So I was like, okay, we have a potential SSMT forming here. And an SSMT is just an SMT with time divergence added inside of it. So like I said, since we're dividing it up into quarters, since there's a divergence between quarter one and quarter two on a weekly standpoint. Since Tuesday didn't take out Monday's low, but if you look at ETH did take out Monday's low, and we created a divergence as you can see right here. So with that, we created an SSMT, and SSMT is a sequential SMT, and it marks out reversals or an expansion of the move. So as you can see here, I saw that ETH took out previous day low, which was Monday, and Bitcoin didn't. So I'm like, okay, this is a bullish SSMT. So once this forms, my entry is very simple. It's either an SSMT fill or a T cyst, and a T cyst stands for true change in state of delivery. And it sounds exactly the same as a cyst. It's basically, instead of marking down the series of down close or up close candles, you'll be marking out the candle that created the low. So if it's a bullish SSMT, ideally you'd want the low to be a bearish candle so you can mark out the high. But if the candle is bullish and it sets the low, then you just do the candle to the left of it. And if the left one is bullish, then you do the candle to the left of it again, and so on and so on. And then it's vice versa. For if it's a bearish, you'd want a bullish candle to form the high so that you can mark out the low of the candle. And once price breaks that low and taps back into it and respects it, then the sequential SMT gets confirmed and you can place your trade. And ideally, you once you get more experienced with it and using the entry model and just using SSMT, you'll know like how to place your risk to reward when going into the trade. So let's mark out the T cyst here. So let's boom right here. And I got in roughly on that. Let me fix this. I got in on this bearish candle. I knew the low was in, especially looking at ETH. ETH was running relatively nicely, so I'm like, okay, there's strength here. So I could get in a little bit early. So we had this candle break above it. The bearish candle, we had a strong wick showing that buyers were getting in control. And then what do we have here? The second candle confirmed it. This was roughly where my entry was at. I'd say like right about here. And then me, since the market was very strong, I just knew London lows weren't gonna get taken out, and I knew the low was gonna be protected. So, but usually, ideally, you'd want to place your stop loss on the low, um, from the sequential SSMT, because technically what could have happened with me is it could have taken out London low. I could have got stopped out and then created a new low, and then you have a new SSMT because the SSMT still hasn't, uh, I guess you could say, been canceled out or invalidated. So you it just depends. Like I said, once you have more experience, you'll understand where to place your stop loss. But I just knew that London just wasn't gonna get taken out just by how hard ETH was running. Um, so I just knew there was strength there going into Asia, and then anticipating that London was also going to follow with it. So I had my stop loss like roughly around this range, and I'd say about here. And then I was targeting uh Friday's high. As you can see here on the daily chart, there's something else that I also kind of implement. Is not anything too crazy, but it's CRT, is just candle range theory. So if, for instance, a candle sweeps out a low or a high and is playing within the range, then you can anticipate for it to target the low and the high depending on where is swept liquidity off the candle. So here on Friday, we swept the low, and Saturday closed within the range, and then Sunday we expanded up. So I knew, okay, this CRT could play out because now we have two candles confirming, and we want it to continue up. So I anticipated. I didn't trade Monday, but I saw that Monday was expanding, so I knew that Tuesday and Monday closed above the high of Sunday. And based off candle closures, this is bullish, so you can anticipate that the next day we're gonna expand as well too. So I just knew going into Tuesday that we were going to expand, because also with quarterly theory, if you're looking at it on Forex on the economic calendar, you can anticipate when the high and the low of the week is gonna get created. So with me, I saw Monday we accumulated, expanded a little bit. Tuesday we expanded, and then Wednesday I anticipated that it would make the high of the week and we'd reverse. So going back here on the 15 minute, we can remove the session so you guys could just see it a lot better. So here, got in roughly around this range, and we were targeting the high. Me personally, I like to place my TP a little bit under specific, on like imbalances, if I'm targeting unmitigated imbalances or liquidity, just because sometimes we could create equal highs and your TP could get edged a bit. To me, it's worked for me, and I see it being the most consistent when it comes to taking profit, and if it aligns with your RR, it's perfectly fine. So that's the way that I set up my TPs, is a couple points below the take profit, just to secure, because the whole name of the game is to come in and make money, so whatever works for you is perfectly fine. So as you can see here, price was pushing up. We were close to my TP, so then I woke up the next day, and this is where I went wrong. So I woke up roughly around like 5 a.m. Price was running. I was like, nice, today's Tuesday, there's no news. I'm anticipating for us to expand, hit that Friday, and then probably continue push price up a little bit more, target other levels, and then coming into Wednesday we start to consolidate, then reverse. And this is where I went wrong. I got too comfortable, and I was like, oh yeah, once market opens, we should be perfectly fine. Price should push up, hit my TP, done. Because as you can see here, London's high, we were super close, and my TP was only off by like $100 in price when it came to Bitcoin's price. So I was like, okay, this is fine. Price was consolidating, whatever. What I did wrong here was, as market opened, it continued, and we just started tanking super low. I'm not gonna lie, my emotions got to me a little bit, and I was kind of hesitant with like what was the next plan to do. So I got notified on my Discord with my trading friends that Israel bombed Qatar. So I was like, oh my gosh, that marked out. I'm not going to blame it on news, because I'll explain where on the chart it anticipated another reversal. But all news is it helps deliver price to a specific price point, just at a faster rate. That's all news is. The chart can usually tell you if news would be bullish or bearish. I'd say roughly around like 90% of the time. There are instances where it just acts wonky, but usually the chart does predict how news is going to run. So I closed out my trade roughly around like a little bit above London's high. As I saw that once we were here on the 15-minute, and this gap was being respected a little bit, but since we closed within the gap again, I just knew it wasn't going to hold, and we were just going to go down, and I didn't want to get stopped off for break even, so I just secured a bit of profit. But I'll explain to you where I went wrong and how it basically predicted the news of the bombing, I guess you could say, that we were going to anticipate the reversal. So here we created another SSMT. Like I said, SSMT confirms the reversal or an expansion. So it confirmed the reversal with, here we have Bitcoin sweeping previous day high, which was Monday. And then if we play this on ETH didn't. So since ETH didn't, let's do this, keep it playing a bit. ETH was tanking and ETH didn't, so that's a bearish SSMT, because Bitcoin made a higher high and Ethereum made a lower high. So that anticipated a bearish SSMT, and that caused the downtrend. And you can see here that with this right here, respected thesis to the T perfectly. And we also have an SSMT fill on the 15-minute, and an SSMT fill is just the first fair value gap created after the SSMT is formed, but it has to be, it doesn't have to correlate within the at the same time. So let's say for instance, um a fair value gap is formed at, let's say, like 9:30 for the first fair value gap formed for Bitcoin, but then the first fair value gap for ETH forms around, like, let's say 9 45. Like, it doesn't matter as long as the first fair value gap, that's all that matters. And if it taps within it and respects it perfectly. And that was my problem. I got too comfortable and I didn't pay attention to specific key levels, because as soon as I saw price consolidating a bit, I should have been looking at higher time frames to see if specific kill zones weren't taken out to anticipate this. And you can see within the consolidation of the SSMT and us respecting T-Sys, as soon as market opened, we manipulated and then boom, just tanked straight down instantly. So SSMT confirmed the whole move that we were going to be bearish. And as you can see here, it was also confirmed right here as we were tapping it consistently right over here and respecting it during before the session started. And then we also had a very small fair value gap here that also got respected perfectly, which is an SSMT fill. And yeah, that's basically where I went wrong. I just got a bit too comfortable. I wasn't paying attention to specific points because I was just so close to my profit. I thought us consolidating here, Bitcoin would just rip up a bit, take the high, and then start to consolidate, reverse, and do its thing. But I was completely wrong. And this is what happens as a trader. You can't anticipate and predict what you want the market to do and play within your rules. In trading, as a trader, you're supposed to react. Anything that's given to you, you just digest the information, you take it how it is, and then you create the perfect plan or execution for what information is given to you, and you'll prosper within this game. Never try to predict and let it play within your rules, because the market doesn't play within your rules, and the market has its own rules and it always wins. So it's all a game of probability at the end of the day. And you just, with your model, you're just anticipating you're on the right side, and that's it. So that's where I went wrong. I did secure a little bit of profit, but I did give back loads of profits with this trade. Just for me, I guess you could say, being lazy and unaware of the highs being taken out. But yeah, overall, still solid trade, solid analysis. I'm making these videos, one, for me to review my trades and what I did wrong and right, but also to teach anyone as well too. My model that I trade, and just crypto in general. I don't see many people trading quarterly theory on crypto. It is a bit wonky using quarterly theory. I wouldn't say, in my opinion, for me, using it is as accurate compared to using it on NASDAQ and trading futures and Forex and other stuff. Just crypto is so manipulated, and there isn't as many regulations compared to all the other markets that you're able to trade. So I feel like that's why it's also wonky. And another thing with crypto is, like, quarterly theory is very, very good. It works well. And like I said, the highest probability for using quarterly theory, in my personal opinion, is using it on a weekly cycle standpoint, a daily cycle, and yeah, sometimes during the sessions it could work if I'd say that it's roughly aligning with NASDAQ and let's say SPY. Like, let's say if on NASDAQ you see an SSMT off London highs or something, and Bitcoin is also doing the same thing, then you can anticipate that Bitcoin is also going to tank as well too, and you can catch that move. But I think daily SSMTs, weekly cycle SSMTs is probably one of the best and highest probability, in my opinion, since it is focusing on higher time frame. It can give you a better outlook and give you better moves and better swings rather than day trading crypto, since it's super volatile. You have market makers, they can, take you out relatively quickly, especially if you're not really paying attention to order flow, volume profiles, structure of the market. It's very easy for them to get you. But overall, solid trade. I hope you guys learned something. If you have any questions, leave it in the comments. I'll answer them. I'm going to be making a Discord soon. I'll have documents in there on quarterly theory. If you want to learn more about it, watch Trader Day. He explains everything. I'd say another person's also good, Riku Trades and Bucko Trades and Bowie Jackson, if I'm correct, if that's his name. But if you search up Quarterly Theory on Twitter, my Twitter is right over here. Sometimes I post entries on here as well too. But if you search up Quarterly Theory, a community will pop up, and you can learn a lot from there. But I'd say the best person to learn from, in my personal opinion, is Bucko's Trade. He's dropped the most information on Quarterly Theory and has simplified it the most. Um, and also, if you guys have any questions with me, I can also teach you as much as I can. But it won't be at the levels of Bucko Trades, because he's been trading this model a lot longer than me. But I still have relatively good knowledge and data back behind it, where I can give you just as much as information. But yeah, I hope you guys enjoy the video. Leave comments, subscribe, and I'll be back with another one soon.